In today's video, we're going to talk about something that most retail investors are not paying attention to right now. While crypto prices move quietly and volatility remains relatively controlled, something much bigger is happening behind the scenes. Wall Street is slowly and quietly re-entering crypto. Not with hype, not with bold headlines, and not in a way retail investors can easily see. Because when institutions move early, they don't announce it, they position first. Today, we're breaking down why Wall Street is coming back to crypto, how they're doing it differently this time, and what this means for the next phase of the market. We've got a lot to get through in this video, so I'll keep the intro short. But if you find any value here, can I ask you to smash the like button? It takes a lot of time to make these videos, but it only takes 2 seconds and costs nothing to hit like, and it helps the channel massively. I'm aiming for 500 likes on this video, so help me hit that goal. Subscribe if you're new and turn on notifications so you don't miss content like this. As always, I am not a financial advisor and this is not financial advice. Please do your own research. I'd also appreciate it if you try to answer the question later in this video. Now, let's get into it. Why Wall Street left crypto in the first place? To understand why Wall Street is returning, we first need to understand why they left. During the previous cycle, crypto was driven almost entirely by speculation. Excess leverage, weak risk management, and collapsing platforms made crypto an unacceptable risk for traditional institutions. When liquidity dried up, Wall Street exited aggressively. Funds closed positions, risk desks shut exposure, and capital rotated back into traditional markets. But while retail walked away in frustration, institutions started studying. What changed behind the scenes? Crypto didn't disappear, it matured. Infrastructure improved. Custody solutions became institutional grade, regulatory clarity increased, and market participants became more sophisticated. This is exactly what Wall Street was waiting for. Institutions don't chase hype, they wait for stability, structure, and scalability. Now, those conditions are finally forming. How Wall Street is re-entering quietly. Wall Street isn't buying meme coins. They aren't chasing pumps. And they aren't announcing positions on social media. Instead, they are entering through spot and derivatives markets, custodial services, payment rails, and settlement layers. Retail investors look for price movement. Institutions look for positioning. When Wall Street accumulates, price often stays flat. That's intentional. They build exposure slowly, avoiding volatility, keeping attention low, and letting retail remain disengaged. By the time headlines appear, positioning is already complete. Risk management is the real difference. This time, Wall Street is not treating crypto like a gamble. Positions are smaller relative to portfolio size. Leverage is controlled. Exposure is diversified across assets and infrastructure. Crypto is no longer a bet. It's becoming a portfolio component. That shift alone changes everything. On-chain and market signals confirm it. While retail participation remains muted, data tells a different story. We're seeing rising long-term holder accumulation, increased institutional custody usage, lower exchange reserves, more capital flowing into regulated crypto products. These are not retail behaviors. These are institutional footprints. Why Wall Street always moves before retail. Institutions move early because they can afford to be patient. They don't need immediate returns. They don't need confirmation. They don't need price to go up tomorrow. Retail does. And that's why retail always arrives late, chasing moves that Wall Street already positioned for months earlier. What this means for the next market phase. When Wall Street re-enters quietly, it usually signals long-term confidence, not short-term speculation. This doesn't mean price goes straight up. It means the floor is being built. Volatility will remain, pullbacks will happen. Retail will get shaken out. But underneath the noise, capital is being placed strategically. The opportunity retail often misses. Retail investors wait for headlines. Smart money waits for silence. When nobody is talking about crypto, positioning begins. When everyone is talking about crypto, distribution starts. Right now, attention is low, but institutional activity is rising. That disconnect is where opportunity lives. Is Wall Street quietly preparing for the next crypto cycle while retail is still distracted? Let me know your thoughts in the comments below. If you enjoyed this breakdown, make sure to like and subscribe, and check out the other videos appearing on the screen right now. Have a great day, and I'll catch you in the next one.